Greetings, members one and all of the Salivation Nation. As I was perusing and doing a little research, I stumbled upon this article here, and then upon checking my email, I see that Silver Honda was thinking the same thing I was. He sent me a link to this very same article. And it's from Bloomberg, and it talks about how a silver shortage will promise to boost the price in 2019. That sounds exciting. So let's explore this article a little bit here. Think of it as a potential silver lining for investors. A deepening shortage is promising to help boost prices as haven demand for the precious white metal rebounds in 2019. Now already I'm seeing some problems with this sentence, with these two sentences, because they use the word invest and they talk about it as a haven. And that, to me, is sort of contradictory because I don't see silver as an investment, because investments typically do pay dividends, or they're speculative, and they're also risky. Investments are, by their very nature, risky. And silver is not such a commodity or money. So the deepening is talking about haven demand for the precious white metal will rebound in 2019. Silver surged 9.1% in December, its biggest monthly gain in almost 2 years. The commodity has benefited as a persistent trade war, weakening dollar, and prospects of slower pace of U.S. rate increases drove haven demand for precious metals. The price outlook is improving at a time when demand for gold's cheaper cousin is poised to top production for a 7th straight year. With miners avoiding new projects and global economic uncertainty, the price could spike as high as $17.50 an ounce from about $15.87 now. This is according to a Bloomberg survey of 11 traders and analysts. About 26,000 tons of silver is expected to be produced this year, according to estimates by Robin Barr, a London-based analyst at Societe Generale SA. That would be the least since 2013, which means global physical demand will again top output. Supply growth has started to slow, more than for any other precious metal, says John LaForge, the head of real asset strategy at Wells Fargo Investment Institute. To be sure, a production deficit hasn't been enough to boost prices in recent years. Silver has traded more like a precious than an industrial metal. Well, I kind of disagree with that. I think it's the other way around, which is strongly influenced by supply and demand balances. The price of silver has plunged by almost half since 2012, the last time the market was in surplus. That was faster than the pace of decline for gold, the most heavily traded precious metal. So the industrial outlook in 2018, when Societe Generale estimated that silver had its 6th straight production deficit, prices still fell 8.5% as gold slipped. And while a dimming global economic outlook is boosting haven demand for the yellow metal, it's also clouding the outlook for industrial demand. That uncertainty raises questions on the durability of silver's rally. We remain unconvinced that the relative preference for silver will continue. Analysts at Goldman Sachs Group, Inc., including Hao Shan, said in a report earlier this month. With many more industrial uses, silver demand is more susceptible to slowing global growth. Production has trailed demand for the metal used in making solar cells, computer touchscreens, and medicine. It's also popular among consumers as jewelry and tableware. Industry, meanwhile, is the most significant user, gathering up about 55% of the available silver yearly, compared with about 10% for gold. The metal's high conductivity to electricity and heat, along with its sensitivity to light and antibacterial qualities, contributes to literally hundreds of products, skewing the supply-demand formula for precious metals. And here we can see the price here. Now it's just above $15.50 here. The industrial application sector will likely boost demand for the metal in 2019, according to Bloomberg intelligence analyst Eli Ong and Tobias Neisdeck, they see silver with a 50% upside for demand by 2023, compared with 17% for copper and 11% for gold. Other analysis see more of a balancing act ahead, with the relative strength of the global and U.S. economies playing a significant role. That's the most important sentence in this article. We'll explore that in a moment. But here we see silver in red with the successive shortages support outlook for the white metal, the surplus and deficit. So we can see in 2013 we had a negative 4.3, negative 2.1, and moving ahead here we can see the surpluses, and not so far in 2019 it's negative 2.2. So it's been in the red. And the Federal Reserve is also an issue. Silver and gold have been among the best performing assets in the past 3 months as investors scale back expectations for interest rate hikes in the U.S. amid signs of slowing global growth. As of the recording of this video, the Fed has begun a 2-day meeting, and they're not expected to raise rates, which will be a first time in a long time. And they're saying that there will be 2 rate increases this year if things go as planned. They're also speculating that there will not be a recession this year. We shall see. The central bank has recently indicated it will monitor data moving forward and decide future monetary policy. If the Fed slows rate increases, it will boost the value of silver and gold. If not, it could drop. And so my feeling is if they don't raise the rates, which is looking like they probably won't, we might see gold and silver continue to climb up a bit, or maybe right now it could be baked into the price increases that we saw starting just last week. Before late 2018, there was no love for the metal. Going forward, these concerns will be played out throughout the year, said Maria Smirnova, a Toronto-based portfolio manager at Sprott Asset Management, which oversees $7.6 billion. There's been a sea change in investor sentiment that obviously drives precious metals, and silver takes its cues from there. On Tuesday, spot silver rose as much as 1.1% and was on pace for a second monthly rally, the best streak in a year. The Bloomberg Precious Metals Subindex, which also tracks gold, jumped to the highest level since June. It was on pace for the 4th straight monthly climb. So there you go. So that's kind of a well-reasoned article, but I'm going to go back to this sentence here. Other analysts see more of a balancing act ahead, with the relative strength in the global and U.S. economics playing a significant role. And that's where I'm at. I'm cautiously optimistic for silver. I do believe it is undervalued, although probably not as much as some of you who have taken part, and I appreciate that, in the recent video that I posted about what do you think the price of silver should be, and it took part of a poll there. But let's take a look at the prices right now. Silver is getting much closer to that $16 level. And I mentioned earlier that silver would be, its new floor is $15, just as gold's new floor is $1,300. And I think we're set pretty good in 2019. We can feel pretty confident that that floor of $1,300 for gold will stay firm. And I believe the same thing for silver. I believe that silver is not going to go below $15. Other people, and then there's some who have been pretty steadfast, Keith High being one of them, that silver is going to go back down below these levels. In fact, the levels that we saw last year, $14 and maybe even into the 13s. Some have even predicted maybe even 12, but I don't think so. I think it'll stay above that $15, and it's getting closer to that 16. However, I do feel, especially considering that sentence, here in this article about the balancing act ahead with the relative strength, considering these deficits and how that's played with the silver price. I mean, here we saw 2013 with this deficit here, and it's pretty amazing that there's been that much of a shortage, but the price continued to drop. And almost like these didn't matter a whole lot. So, with that being said, and where the economy is now, I think most people are agreeing that we're going to start to see somewhat of a slowdown as the year progresses. And though they may be tepid and with their dovish, the Federal Reserve dovish with the rate increases, I believe that if the economy does slow, especially in Asia, then I believe that we'll see less silver demand for electronics. And if that happens, that's going to keep the price pretty tepid, either where it's at or maybe even fall to where some people have been predicting. There's a lot of people. I've seen a growing number of people that are bearish on silver too. So keep that in mind for this year. That there's a chance that the economy could, worsen or level off or maybe even decline a bit without a recession. And we could still see silver remain or even fall a bit, given that circumstance. It's that balancing act. Then you have to think of, the psychological element of it as well. So post your thoughts below. Very interesting indeed, and we'll see what happens. I mean, part of me likes to see the low prices to buy, but I wouldn't mind if the prices went up, because I think that's going to give us a little bit more confidence that what we're doing is the right thing by hedging ourselves with this so-called investment. No, it is a savings account. It is the ultimate insurance policy to protect us from economic instability. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.